Good afternoon. This is Sean Golding with Golding & Golding, expanding upon our 2024 filing series. Let's talk a little bit about the filing requirements for U.S. citizens and U.S. residents who have foreign income, expats, foreign residents with who have U.S. tax status, and things of that nature. Let's start with the tax return due date, right? You're a U.S. person, you file a Form 1040. Your tax return is typically filed on April 15th. Some years it changes like the 16th or the 17th, depending on what day it falls, but typically April 15th. If you're an expat foreign resident, then you generally have until June. It's an automatic 2-month extension, and you don't have to request an extension. You don't have to file like a 4868 or anything. If you want to file an extension to October, whether you have a 4/15 or 6/15 due date, then you would file an extension. There's typically a few ways to do it. Form-wise, you would file a 4868. Typically, we recommend that you file the form, although, prepaying tax and things like that can sometimes serve the same purpose. Sometimes some people may qualify for a December 15th extension, primarily if you're overseas, and there's certain requirements that you have to meet. There's not a form per se, but the IRS does have the authority to grant it. In addition, there's other forms you may have to file. For example, if you're waiting to file your return because you're waiting to qualify for the foreign earned income exclusion, and it gets infinitely more complicated, but from a baseline perspective, these are the 3 main dates and possibly the 4th date depending. Now that's for your taxes. For the international forms, it's a little bit different depending on the form. For example, the FBAR Foreign Bank and Financial Account Reporting FinCEN Form 114 is an electronic form. It's due April 15th, but it's currently on automatic extension, or it was at least for the past few years, and you definitely want to check online the IRS website as you get closer to the April due date. But typically, it's been on extension until October. The Form 3520A is for reporting U.S. owners of foreign trusts and other foreign trust transactions. Generally, that's due on April. To file an extension for that form, you do the 7004, not the 4868. Okay. To make it more confusing, for the other forms like the 5471, 8621, and 8938, those are filed with your tax return. If you file an extension for your tax return, that goes on extension as well. Same with the 3520, not the 3520A, but the 3520 is filed with your tax return. If you have a 3520A and there's like a foreign trustee and they don't file the form, then there's an exception where you file that with the 3520. But at the end of the day, things to keep in mind: FBAR is due April, automatic extension till October. 3520A is due March, or 75 days, depending on the trust and the date of the trust. But for most scenarios, it's March 15th, and then you have to file the 7004. The other forms tend to go on extension if you file an extension for your regular tax return. I mentioned it before, but the 2 types of forms are the 4868, that's for your tax return. The 7004 is for more kind of business and other related forms. The 3520A falls under the 7004. So if you file an extension for your 3520, your 3520A does not automatically go on extension as well. What do you report on your tax return, right? The United States follows a worldwide income tax model. We have a lot of information on our website about this, but essentially, it's not based on your residence, it's based on your U.S. person status. If you're a U.S. citizen, lawful permanent resident, foreign national who meets the substantial presence test, you report your U.S. and your foreign income. You report all of it, okay? Even if you pay tax overseas, even if you live overseas and all of your income is sourced from overseas. If you pay taxes in a foreign country, you may qualify for foreign tax credits on 1116 for individuals. If you live overseas and you meet the tax home in either the physical presence or bona fide residence test, you may qualify for a Form 2555 foreign earned income exclusion, which lets each individual taxpayer exclude. Right now, with adjusting for inflation in 2024 for the 2023 return, I believe it's $120,000 per person, and then there's an additional housing exclusion. So a married couple could each claim the exclusion and potentially have $250,000 of their income excluded. Very important. It does not mean you don't file. I don't care if you're sitting in some expat bar in some country and they're telling you, dude, you don't need to file. You're out of the country. You're below the amount. You have to file, because if you don't file, the IRS doesn't know that you qualify. It didn't used to be as big a deal, but with the increased FBAR and FATCA enforcement, along with passport revocation and denial, if you're only a one citizen guy or gal and you're overseas, you don't want to have your passport revoked because of a substantial tax liability that you would otherwise have to file if you had claimed the exclusion. For non-residents, you do not file a form. Now, not non-residents like a U.S. citizen who lives overseas or a permanent resident who lives overseas, but non-resident aliens do not file the 1040. They file the 1040-NR and only report their U.S. sourced income. Now, if you're a U.S. person because you met the substantial presence test and you qualify for the closer connection exception or another exception, or you're a U.S. person because you're a lawful permanent resident but you qualify under one of the treaties to be treated as a foreign person for tax purposes, then you may qualify to file the Form 1040 along with the 8833 treaty election, so you are treated as a foreign person for tax purposes. The IRS says you still have to file the FBAR. Recent district court case in California called ROS Day, I hope I'm pronouncing that correctly, says you may not have to. There is a distinction between filing it timely and filing it perfectly, right? For a lot of you OCD personality types, you want to get, and there's nothing wrong with that, right? You want it to be perfect, but there's also a timeliness factor. It is better to do the best you can with all the information you have available after a diligent and reasonable search and make it the best you can, and then go back to amend it when you have the information that you need that's missing, assuming it's material, as opposed to not filing it and saying, oh, I didn't file, then another year goes by, and then next thing you know, you're staring down the barrel of some potential civil penalties, even possible criminal, but most of the time it's not criminal. A few important tips when it comes to filing. The U.S. uses a worldwide income tax model. So what that means is your presumption should be all of your income is taxable, U.S. and foreign sourced. And then if an exception, an exclusion, a limitation, a treaty election applies, great. You may not have to pay tax on that, or you may not have to include that as income, or you include it and then exclude it, like certain Social Security and treaties. Oftentimes you'll include the income, and then on the next line you'll exclude it based on articles in the treaty, normally somewhere between 17 and 22. You generally don't have to file an 8833. There's a lot of exceptions, but if you have to file it, you should, and you should check the Form 8833 instructions they listed out there. It's boring and tedious, but it's all there. Foreign rental income, we see this a lot, so I just wanted to touch upon this briefly. If you have foreign rental income, it's reported the same as U.S. rental income on Schedule E, except for the fact that the depreciation schedule is normally a little bit different. Let's say you have a foreign property, you generate $20,000 worth of income, and you have $30,000 worth of expenses. Does that mean you don't have to file? No, it means you file the Schedule E, and then you claim all of the expenses so you can show that it's negative. Depending on your income, you may actually have passive activity losses, or you can carry them forward and use it as another time when you dispose of the property. Self-employment. When you are self-employed, you file a Schedule C, as in Charlie. Now, unfortunately, some people will get a double hit of self-employment tax, but depending on whether or not the United States has entered into a totalization agreement with a foreign country, you may not have to double up on that, for example. But not all countries have it. I think there's 24 to 26 countries have it. So, for example, let's say you have a business in Australia and New Zealand. You may have it with Australia, there's a totalization agreement. You wouldn't have it with New Zealand where there is not. It updates sometimes, so it's always good to check. Now, if you're sitting down to file your returns, you have foreign income accounts, assets, and investments, and realize, geez, I should have been doing these things in prior years and I have not done it. You have to check on when the tax return is due, how much time you have, do you still qualify for the extension, and consider whether you want to do one of the offshore disclosure programs so you can avoid a quiet disclosure and limit, minimize, or even avoid penalties depending on which program you qualify for. If you're willful, the only option is typically the voluntary disclosure program. If you're non-willful, there's a lot more options available. There is the streamlined domestic offshore procedure, streamlined foreign offshore procedures. There is delinquency procedures, delinquent FBAR, and the delinquent international information return submission procedures, although the latter program shifted in November of 2020, I believe, and so you no longer are guaranteed a penalty waiver, where you're pretty much still guaranteed the penalty waiver under delinquent FBAR procedures. And of course, if you qualify for reasonable cause, possibly qualify amended return depending on your facts and circumstances. We have a ton of free information available on our main websites and all of our sub websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate to your matter. It's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.